Hello and welcome to Swag Academy. In this video, I will make an in-depth stock fundamental analysis of the company StoneCo Limited. I will cover its history, business model, growth, balance sheet, profitability, outlook and risks, valuation, and finally do the 3M analysis. So make sure to watch till the end of the video. StoneCo was founded in 2012 by Andre Street. He is the founder and chairman of the company. Its headquarters is in Brazil. The company has $4.81 billion market cap. Its stock is trading around $15.57 at the time I'm making this video. Stone is a leading provider of financial technology solutions that empower merchants and integrated partners to conduct electronic commerce seamlessly across in-store, online, and mobile channels. Stone serves clients of all sizes and types that transact online, offline, or have an omni-channel sales approach. Stone also serves many integrated partners which use or embed Stone solutions into their own offerings to enable their customers to conduct commerce more conveniently. The company makes money by charging fees for its services. These include transaction payment processing, prepayment financing, subscription, and equipment rentals. Now let's check the growth and revenue of StoneCo. StoneCo became a public company in 2018, so there are no data before this date. StoneCo grew its revenue from 2,390 million Brazilian real to 11,364 million Brazilian real within 5 years. This is almost 5x in 5 years, so the company is a growth company. It is growing at a fast rate. Now let's check the profitability of the company. The gross profit is a result of revenue minus the direct cost to create these revenues. The gross profit margin is a result of gross profit divided by the revenue. The gray line in the chart represents the gross profit margin over the years. StoneCo gross profit margin is between 62 and 82%. This is a high gross profit margin compared to other companies. Now let's check the operating profit and the operating profit margin. Operating profit is a net income derived from a company's core operations. Put it another way, it is the amount of money that a company has left over after meeting its operating costs but before paying its taxes. StoneCo was very profitable in 2019, 2020 and 2023. However, they lost a lot of money in 2021 and 2022. StoneCo provides merchants with payment solution but expanded rapidly into lending a few years ago. In the fourth quarter of 2020, the company extended 1.5 billion Brazilian real in loans, which represented an 812% increase year over year. The fast-growing part of StoneCo business hit a wall in 2021 when the Brazilian economy struggled with the high interest rates and the slower than expected recovery from the pandemic. StoneCo's problem was compounded because it relied on Brazilian National Registry data to determine the creditworthiness of borrowers, only to discover that it contained bad data. As a result, the fintech incurred huge losses on its loan portfolio, its net income took a big hit, and its stock price plummeted more than 90%. StoneCo has again started to expand its credit business but is taking more precautions this time. It's taken steps to improve its underwriting, including updating its risk models, enhancing data, slowly rolling out credit models, and evaluating their performance. So now we know why the profits took a big dip in this period. Now let's have a quick look at the free cash flow. As you can see, the chart is all over the place. The company is free cash flow positive, at least in the last 3 years. However, they must invest a lot in their growth and the losses that occurred because of the money they borrowed. The free cash flow margin, which is free cash flow divided by revenue, is 8%. Not a bad result for a company that is growing and investing in its sales and marketing structure. Now let's have a quick look at StoneCo's balance sheet. StoneCo has 37,152 million Brazilian real in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The total current liabilities are the liabilities which the company must pay within 1 year. StoneCo total current liabilities are 29,142 million Brazilian real. StoneCo total liabilities, including long-term debt, are 34,017 million Brazilian real, which is less than their current assets. By calculating the current assets minus the current liabilities, StoneCo is left with 8,000 million Brazilian real cash on its balance sheet, making the balance sheet extremely strong strong and healthy. StoneCo can use this money to buy back stock, invest in the company, or buy another company. Now let's jump to valuations. StoneCo has a 2.22 price to sales ratio, a 16.69 PE ratio, a very cheap 5.27 price to free cash flow ratio, and a 1.62 price to book ratio. Pause the video and check how the current ratios compare to previous years. Now let's do a discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering a 20% growth for the first 5 years, a 15% for the 5 years afterward, a terminal multiple of 16 and 15% discount rate, the intrinsic value of the stock is $16.4. StoneCo is trading at $15.57, giving the stock a small margin of safety. Now let's discuss outlook and risk. Brazil is one of the largest e-commerce markets in the world, with a population of more than 200 million people. In 2021, e-commerce in Brazil increased 27%, and it's forecast to grow at a compound annual rate of 14.6% for the next few years. That puts StoneCo in an excellent position as it makes itself the top e-commerce solution provider in the region. StoneCo main market is Brazil. It is dominant in Brazil, however not alone. StoneCo is facing competition from various other companies, including ADN. I made a video analyzing the ADN stock if you are interested in the company. In recent years, the company has built a super profitable cash-generating business model. What they are doing now is basically taking advantage of and leveraging these opportunities to use this cash to grow the business and improve profitability. Furthermore, there are potentials that they might expand in South America. However, Brazil is facing high inflation and corruption in their politics. This might affect the results of the business. Finally, the 3M analysis, 1M for moat, 1M for management, and 1M for margin of safety. StoneCo has a strong moat. By having a strong distribution moat, StoneCo is also able to enter into new areas, to expand its total addressable market, since its competitive advantage does not lie with the strengths in a certain product, but also its ability to distribute effectively and efficiently with its massive 500k plus client base. This would provide it with a long industry runway to continue reinvesting and growing for many years to come, and also positions itself better from any risk of disruptions to certain of the solutions it is providing now. Furthermore, the business is sticky. A client who uses the StoneCo solutions will unlikely switch to another competitor. Now let's talk about management. Management have done a good job growing the company, however they suffered huge losses in 2021 due to bad decisions. So I would say management has done an okay job thus far. It is normal to do a mistake when the company is so young and at an early stage. For the margin of safety, the stock is trading at fair value and the balance sheet is strong and healthy. In conclusion, StoneCo is a great company with a great future. I currently have a small portion of my portfolio in StoneCo. This stock was once owned by both Warren Buffett and Katie Wood. Should you buy the stock? Well, if you can live with the risk of the Brazilian market, then this could be a multi-bagger for you. Let me know in the comment section below what you think of the company and if you want to invest in it. If you have found value in this video, please give us a like, this helps so much, and consider subscribing. Thank you so much for watching the video.